This podcast is for informational purposes only. It is not intended to be financial or investment advice. Seek a licensed professional for investment advice about crypto or any other investment. Welcome to the Blazing Crypto Podcast. We're Justin and Brandon, and wow, what a hole. To quote Marv from Home Alone 2, holy moly. We interrupt our regularly scheduled podcast program to talk about what's been going on. So Justin, I guess it's safe to say that Bitcoin is not going to hit $215,000 by March the 1st. What do you think?
Hey, one thing I am learning from the last 2 weeks is never rule anything out. So, but yeah, I don't see that. It is not likely happening.
There's any number of mistakes that a person, could have made in the last couple of weeks. I just wanted to say, for the record, I'm glad that you or I, we're not on a podcast or anything predicting, $200,000 for Bitcoin in a quarter one time frame. At least we're not on the record for saying that.
It was, I don't even know what you're talking about. There's no record of that anywhere from what I know. That's for sure.
Yeah, so that's a funny way to say in one sense. Certainly crypto has not gone how we thought it would go. I think it's also true to say it hasn't gone how anyone thought it would go. And I think it's also important to say on a third level there, that really goes for all the markets. No market right now is immune to what is going on in the national economy, in the global economy. There's a lot going on right now. And the last thing we want to do is represent that we have it all figured out. And I would even say, if anyone tells you they have it figured out or makes a really, really, really bold prediction, I would be pretty nervous about swallowing that hook, line, and sinker. Today, our focus is really going to be on trying to provide perspective, trying to go back to our principles for how to think about this space. These are the things that we don't retreat to sort of as a concession or as a coping mechanism, but these are really more like anchors in our thinking. And when all the noise is going on, when everything is hitting the fan, being principle oriented, I think it's right. It's the way to go. So Justin, there are some key reflections, some points of clarity that you and I have been working on together, because obviously we're in this too, and everyone's portfolio value took a massive hit in the last couple of weeks. So start us off. What is one of the big key reflections you've had in this whole ordeal?
Wow, I feel like I've had like 100 key reflections in the last 2 weeks, but I think one of the big things that stands out to me, it's really easy when you're looking at the fundamentals of Bitcoin or Ethereum or just crypto in general to be like, man, everything is so bullish right now. Adoption is happening. We can see development happening and new technology coming out. And it's really easy to get really excited about that. And then I think one of the dangers that it's easy to fall into is to then say, therefore, the price must go up in the immediate future, right? And I think when we look at fundamentals and we end up in a place where we're then talking about immediate price action, it's just a really dangerous place to be, because like what you mentioned, it's out of our control, really. There's a lot that's out of our control, and there's a lot that's going in the global markets right now. But at the end of the day, no one knows what's going to happen tomorrow, right? With the price of Bitcoin, with the price of Amazon, Netflix, whatever it may be, there's a lot of uncertainty, and that really affects the immediate price.
Absolutely. I think it goes without saying, but one of my key reflections is we're in uncharted territory. And what I mean by that is, kind of to use our blazing analogy, we're in a place where there's really not a trail map. There is no historical precedent in Bitcoin history over the last 12 years. There is no historical precedent for where we are. And in one sense, that's scary. But in another sense, it comes with the territory. And so again, that's really why we sort of started this thing, even though we would have never wished for this to happen and we would have never imagined it happening. This was not high on the probability of my range of outcomes that we would end up here. However, we just have to realize it. We have to realize we're in uncharted territory, which just means we're going to have to take it day by day, step by step. A third item, Justin, that you and I have been talking about a lot here is again, driving back to the core principles. And for us, that's our core four. I'm going to briefly remind myself and all of us what those are, and kind of curious for you, which one of these is sort of like front and center for you. So first one is honor the king and queen. The fact that crypto is dominated by Bitcoin, Ethereum, and you get punished if you forget about that. Secondly, understanding that Bitcoin does follow a life cycle. There's more to say on this, but maybe we were a little bit closer to the life cycle than we originally thought. More to say later. Third, make DCA your best friend, which means we avoid all-in, all-out mentality. We scale into the market, we scale out of the market. And then fourth, protect the asset. The whole goal is you can't build long-term wealth if you lose your crypto, and there's a lot of ways to do that. So Justin, without diving into all of those, which one of those is sort of the big point to you right now as it relates to our principles?
For me, it's honor the king and queen. I think the main reason that one resonates with me is because I got it right. Like, I was honoring the king and queen in my portfolio, and I haven't always done that. So, like, there have been times, like the last 2 weeks in the past, where I would have been essentially, overly exposed to some, who knows what coin. And when the market takes a dump like this, if you're sitting in that, you're going to take a beating, and it's going to be really difficult. I mean, it's difficult even if you're just sitting in Bitcoin or Ethereum, right? Like, but honoring the king and queen, I think, like, if you weren't honoring the king and queen in the last 2 weeks, you probably feel it pretty hard. And ultimately, that's how we learn these lessons, or at least I know I did. I had to learn that the hard way. It's like, okay, we finally got that right in this drop off, and that was encouraging.
Yeah, for sure. And for certain, we got it right on paper. Knowing what you should do and doing it often are two separate things. And like you said, we've gotten that a lot more wrong in the past than we did this time. Hopefully for our audience, I know for a number of our Blazing community members, they're mostly in Bitcoin, Ethereum, and Solana, and that certainly has served them better than being in some other things. There's this painful point that you sort of think can't happen until it does, and that is altcoins from whatever their peak or their top is can go down 90%, and then they can go down another 90%. In other words, from the point at which they had retraced 90%. And that is you think to yourself, that's not possible. But my friend, it is very possible. Certainly, once it goes down 50%, it can absolutely go down another 50%. And it's a painful reality. I think that I know people are very interested in altcoins. Justin, what is our most listened to podcast episode?
Oh, Altcoins 101. We recorded. I think we recorded it a few weeks ago. Yeah. Maybe a month ago. But yeah, that's been by far the most popular podcast, which I guess that says a lot.
It really does. I mean, the data doesn't lie. I mean, everyone's interested in altcoins for any number of reasons. I've heard a lot of people that are entering the space. They'll say things that at least indicate they feel like they missed their opportunity with Bitcoin. They missed their opportunity in Ethereum. And again, certainly you're not going to have 100x opportunity in Bitcoin in the next 2 years. It's not going to exist. You're not going to have 100x opportunity with Ethereum in the next 2 years. It doesn't exist. But when you open yourself up to the things that do have 100x opportunity in the next year or two, you also open yourself down to up to the drop and 90% of your value a lot faster than it seems possible. So it is what it is. And if that's you, I'm sorry. I'm sorry. I've been there. I've been there before. But it's just, a good reminder to honor the king and queen. And it's worth mentioning, since January 1st of 2021, I think from January 1st, 2021, I don't know what date you would say the altcoin season kind of ended, Justin, but we don't usually get 9-month alt seasons. And last year we had essentially a 9-month alt season. Now, some of the alt season ended in May. I think a lot of coins never got back up to their peak. But the point is, a lot of alts moved heavily against Bitcoin for about 9 months. And one mistake I would just note real quick, and then we'll move on, is when we are in an alt season, everyone thinks, oh, this time is different, right? Bitcoin is dead. This time is different. And it's not different. If you find yourself feeling that or saying that, again, you got to go back to your anchoring principle of this is how this space works. So, Justin, anything that strikes your memory there, or your interest?
Yeah, I think the one thing I would want to say is it's all about risk management. Like, I love altcoins. I love trading altcoins. But if you don't understand the risk management part of it, that's where it just becomes very dangerous. So, for example, I took a trade like 3 days before everything dropped. So I guess like early last week. And I was up on the trade about 20% within the first, day. And then within the next 4 days, that trade had gone south. It went from 80 cents all the way down to about 35 cents. Now, 3 years ago, I would have maybe been in that trade with a lot of money. Whereas this time I was only in it with like $50, right? So that is risk management, right? It's okay to, to have exposure to these altcoins and try to get those big pumps, but honoring the king and queen and risk management means, hey, I'm going to do that with a smaller portion of my stack. So hopefully, that's one of the big lessons that's learned where, you've got your risk, in a box where you're not going to expose your whole portfolio to being down 60% in 3 days.
For sure. I think that sometimes I hate when people revert back to cliches. It feels like a cop-out. It feels like, someone hasn't put thought into it. But another key reality for me and reflection is, there's a reason why DCA makes sense. It seems like, in one sense, well, of course, that's the easiest thing to do because it doesn't require a lot of thought, right? It doesn't require a lot of strategy. I set up a weekly or monthly or bi-weekly buy, and I just do it every time. I was in a scenario where I was actually trying to funding a Roth IRA option that has a crypto component to it, where you can actually buy and trade crypto inside the Roth IRA. And it was when Solana was bouncing between the 240, 230 zone, I forget, maybe a month or two ago. And the whole time I'm thinking, I had an amount of money I wanted to move in to fund that Roth IRA before the end of the year. And I remember this like, oh man, like it's 230, it's 235, it's 238. I'm waiting for my ACH to transfer over. Like, oh, come on, I'm missing the boat here so I can move this stack of money in. I'm down like 55% in 2 months on the money that I put into that Roth IRA. And it's fine. It wasn't a massive amount of money, but it wasn't $50 either. It's just, I wish I could always have the clarity and the simplicity of thinking that DCA is the best option. If you've only DCA'd every week, you're in a you're in about as good of a position as you could possibly be in. We're never going to sell the top and we're never going to buy the bottom. I have no idea if 34, 35K is the bottom, if 30K is the bottom, if 20K is the bottom. I have no confidence in any one of those scenarios.
Yep. But you do have confidence in, the dollar cost average approach, right? Like I think that's where you can find your confidence of knowing, hey, not going all in at one time or all out at one time. That's certainly another aspect of the risk management.
Right. It's kind of like saying, and I'm trying to adopt this this thinking even at work. I lead a digital marketing agency. I'm trying to adopt this thinking of not thinking about business or life as these massive decisions that I've always got to sort of queue up for and be ready for, but more like I want to be going the right direction, and I want to make 1,000 right decisions. I want to make 1,000 good decisions going in the right direction. And to me, that's what DCA is. It's 1,000 really good decisions because, like you said, I've got complete conviction and confidence that I want exposure in this space. I know the coins I want exposure to. What I don't know is exactly how to get in there and maneuver and move in, move out. And so it's like, let's take that variable off the table. And DCA does it. So in one sense, it sounds like a cop-out. But again, 90% of crypto traders lose significant amounts of money. And the events of the last 5 days or maybe even 6 weeks, I mean, there you go. That is Exhibit A for that quote.
Yep.
Justin, any additional sort of moments of clarity or key reflections, principles for you kind of in what we've just gone through?
I think I don't want to get too far into like the blow off top and all of that stuff, but as we kind of like set expectations for myself, as I was processing all of this in the last week, Bitcoin itself did not have the high-end volatility that I was expecting it to have, right, in basically during January, February, kind of like where we're at right now. And it was kind of like this moment where I was like, oh, we're going to get like none of the upside volatility and all of the downside volatility. And that's something that you want to be thinking about and not worrying about, but it's got to be on your radar. But that's kind of like one observation I'm having is coming out of this is I think I'm in a good place where like I don't know where the bottom is, but I feel like overall, if you zoom out and look at Bitcoin, the volatility it's basically coming down. It's getting lower and lower over the last few years. So I think that this type of volatility that we saw in the last 2 weeks, as blockchain adopts and, moves forward, we're going to start seeing less of that, over the next decade. I don't know when I don't think it's a switch that just turns off and on.
Right.
But I do think that we're going to see less of this as the markets mature.
Yeah. And I think the technical term in play there is deceleration. And again, as you and I have talked about, deceleration has really always been happening in Bitcoin. Bitcoin has slowly been decelerating. It's just that, this instance feels just a little bit odd. One thing that I think it would be foolish for us to try to fully diagnose right now and put a label on it is sort of like why all this happened. You made a comment, Justin. I remember a text from you. Maybe it was in March of 2021. And I remember you say, no. It may have been sooner than that. It was when Bitcoin was like launching, like going up very fast, where we would have 7 or 8 good days and one correction and then 7 or 8 more good days. And you're like, holy moly. I remember you texting me and saying, I don't want this to go this fast. This really needs to slow down. And I was like, whoa, why? I like, this is good, right? Fast in the right direction. But I think what you were alluding to is this is not how this is supposed to go. And in one sense, we did have a really rapid rate of acceleration up to 64K, and then we had a really, it wasn't the sharp blow off top we expected. The point I'm getting to is, I think only time will tell. Did all the macroeconomic and virus and response to virus stuff, did all of the quantitative easing and money printing and all of the sort of reactive, remedial reactions of the Fed, I mean, did all of that just create this outlier, like unexpected, weird shape, right? In other words, I'm sort of curious in 4 to 6 years if we'll look back on the last year to year and a half in the same way we looked at that March 2020 blip, where we literally, Bitcoin almost, in theory, almost went to zero momentarily, right? It was sort of propped up by a couple things. We look at that and we don't even talk about it because it was just a deviation. It was an outlier. I just say that to say, I think we just have to look at this zone and say, this is a unique time. And I don't say that as a cop-out. I just say that to say, looking for easy answers is not going to benefit us, and I don't know that we'll have the clarity of exactly why. And I think what I'm trying to get to is to say, I wouldn't even necessarily say that what happened in the last 18 months is the new paradigm. We don't know yet. We just don't know. But any additional clarity there?
No, I think the one thing I would want to go back to is just everything's a mess right now. So I was telling you, like, we were at lunch the other day, and I was mentioning like Netflix. I saw Netflix, the chart looked horrible. I think Netflix was like down 50% in the last few months or something like that. And I think it was really helpful for me to see, like, okay, price does not always reflect reality, right? Like, Netflix is going to be fine. Netflix is, no one's questioning whether or not Netflix is going to be here in another year, even though their chart looks terrible. So to me, it was kind of helpful to be like, okay, I got to always go back to this, being able to separate the immediate price action from the fundamentals, right? Because Netflix isn't going anywhere. They're going to do great unless they, make some stupid decision. But yeah, they're not going to go away because their chart doesn't look great. The whole world economy right now is it's struggling.
Yeah. Don't be a slave to why did price drop 2%? Why, which news headline moved it? Things are way more complex right now than trying to do that. So exactly. It's funny. I remember when this sort of slowly built over time, crypto Twitter and all of its upside and downside. It was this growing narrative of, oh man, institutions, corporations are coming. Isn't it going to be awesome? All this, the wall of capital, right? The wall, the trillions of dollars of capital. And it was almost like we only saw the upside. Oh man, we're front running Wall Street. I mean, I said that. Wall Street had to wait for certain regulatory principles to come into play, et cetera. And we're thinking we just front ran Wall Street. Well, the reality is, Wall Street has a sell button too. Wall Street can short Bitcoin, not just long it, not just buy it. And so again, the volatility goes in both directions. I think the good news is, Justin, you've been really consistent in saying this. You had a long time in 2020 to buy Bitcoin under $10,000, and actually even under $8,000 and under $6,000. Any DCA that you did there, today you are still up 3, 8, 10x of the DCA you did, even after all of this. So do I want exposure to an asset that goes 15x and then drops 50% and then goes another 8 to 10x, 12x? Yeah, I think I want to be along for the ride.
Yeah, I'll accept that type of volatility.
But again, you only get access to the positive volatility like if you're actually in the market, right? And that's going into, if we are in a bear market, we'll talk about scenarios in just a second. If we are in a bear market, if you go on the sidelines for 2 years and wait for the hysteria to come back, you've missed probably the biggest opportunity that you'll have in maybe a 5-year window. And that's probably its own discussion for later. The last thing I wanted to say on sort of this moment of clarity and key reflection, Justin, you mentioned, Netflix stock being down is not, it doesn't mean the end of Netflix. No one is calling for Netflix to go to zero. And no one even thinks about Netflix from a stock standpoint unless you own it, right? We're users of Netflix. We don't even, the stock price doesn't even affect our use, right? The big idea I would want to leave our audience with today is this. Blockchain is irreversible. And by irreversible, I don't mean that quality of immutability, of the fact that like once data is recorded to blockchain, like it can't be altered, right? Like it's permanent. I don't mean that. I mean there's no going back. The rate of adoption, not just amongst people. We're talking about companies. We're talking about cities and municipalities like Miami. We're talking about countries like El Salvador, athletes, CEOs, influencers. I mean, there's an entire industry that did not really exist 4 years ago. There's a blockchain mining company in Greenville that's mining a ton of Bitcoin every single day and week and month. This is not going away. And so I think the price is frustrating. The markets are frustrating. It's complex. It's difficult. It's like sitting at a high stakes poker table with people that have a lot more money and experience than you or I do. This is not for the faint of heart. But if I could inject a dose of clarity, I would just say, again, blockchain is irreversible. This is not a fad. The global movement towards blockchain is not going the other direction. And I think in reality, like you said, we've got to think about the tech differently than we think about the price. I think blockchain adoption is still in the first inning of the baseball game. And that's why we're in this space. You and I, Justin, are not, we're interested in the market. We want to know the price. We're not in it because of the price. We're in it because this is the way we see the future of everything going. And either you believe in the increasing rate of digitization all across the board, either you believe that's happening or you don't. And if you don't, there's really no way you can with a conscience like invest in the space. But if you do, it's almost hard to have a conscience and not invest in the space. And I don't mean to strong arm anybody. I just mean zoom out, the macro clarity on that I have. In one sense, I really don't care what the price is. I really, really don't. I want it to go up. But I'm just as bullish on this space as I was 6 months ago.
Yep. Yeah, definitely.
Yeah, a lot of energy there, but it's just because, yeah, either you believe in that or you don't. Justin, let's take a few minutes here. I want to talk about what 3 scenarios we at least see from people we've read, research we've done, just experience we have, thoughts we have. 3 scenarios for how things could go from here. And I realize if you're on audio, right, like we don't have charts to show. It's a lot harder to talk about than to show you. But I want to talk about 3 scenarios. We're not really going to make a call. It's not really about predicting anything. I think it's important to know, okay, this is sort of range of outcomes and to make sure that you're prepared in sort of any of those cases. And obviously we'll update as things change. But Justin, can you go through sort of the 3 scenarios that we foresee happening, and then we'll make a couple of remarks about that.
Yeah. So it's not rocket science, right? Like the three scenarios that I could see happening are Bitcoin takes a while to recover from this price action. I would even say just the whole market has a rough year, and that really depends a lot on yeah. When I say the whole market, I mean like global markets have a difficult year, and we just see prices continuing to decline for, let's say, the next 8 to 10 months. Yeah, so that would be like, I guess, like worst case scenario is you see just continuous sell-offs for the rest of the year. I don't think that is most likely, but I would say it's an option. Another option is basically things continue to go sideways from here. So it's not, we're not just dropping off a cliff for, 8 months, but Bitcoin ranges essentially, let's say from 30,000 to 45,000, or maybe even 50,000 for like the next 10 months, 10 months to a year. Like that could very easily happen where things just get really boring and everything's just going sideways. And then I think another option on the higher end, though, would be we see a recovery across all markets, like a V-shaped recovery where everything basically bounces back to where it was, whatever, 6 weeks ago or something like that, and then continues to go on its bullish journey. I think that's another good option, but typically when I see price action like what I'm seeing, it just usually takes a while to play out. So I'm kind of preparing myself for the most likely scenario for me would be like the boring sideways action.
Yeah, and last point I think on my side is, I don't think we can rule out a return to the bull market. I agree with you. I'm not counting on that. I'm not sort of moving my chips to the table with some big expectation of it, but I do want to be ready for it. And being ready for it may look different depending on a couple of different scenarios, which we'll talk about later. But I just want to mention, and maybe this is sort of beyond what other people are interested in, but normally crypto has been decoupled, not correlated with equity markets. And sometimes, equities are up, stock market is up, Bitcoin was down, and vice versa. A number of people we follow have pointed out that they've been unbelievably correlated, really the last month or so, and maybe even a little beyond that. And I think the reason that is because everyone that has a big lever, every investor, trader, hedge fund manager, et cetera, that's trading the market, they're all beholden to everything the Fed says right now. Every announcement, right? Like people are baking in worst case scenarios. And that's why, in one sense, I'm not trying to flip out, because oftentimes when price does what it did and it seems to be bottoming, like crashing, that's really people are baking in a worst case expectation. And then if it's better than that, you'll see price bounce, which I think is actually kind of what we might be seeing right now. And that was built into our expectation a little bit. I think you're right, though. If this is the last thing I would say here, just if you want to sort of pay attention to the news a little bit more than normal, be careful. You know yourself better than anybody else. But
I think I'll pass.
You might be, just DCA and chill, right? Oy vey, I can't believe I just said that on record. But at least from a financial side, if the Fed says they're only going to do 3 rate hikes and they'll all be in the last quarter of the year, I don't even know what the full menu of options looks like. The point is, if the rate hikes are going to be on the back half of the year, if they're going to be after the election cycle, if there's a big sort of delay in them or pushing back, we're going to feel fairly confident, we're going to see markets rebound. And honestly, they could rebound like pretty strongly. I would just say at least hold out an expectation that that's possible. Not saying it's likely. I'm just saying whatever the Fed does, the markets will respond in one direction or the other. And I think we just have to know that. I'm not an expert there. It is something I pay a lot of attention to. I'm just letting you know it's tightly tied together right now, and we will feel a response, a bounce, a drop, no matter what happens. So again, this is not about whether people have lost faith in Bitcoin. This has nothing to do. This is risk on or risk off, and we've been risk on for a couple years, and basically just recently people went risk off because they just don't know what's ahead.
Yep.
All right, that's more macroeconomics than we've gotten into in our 10 episodes here. But anyway, I think that was worth mentioning because it affects where we are and there's nothing we can do about it. So the last thing we want to say is we're actually going to continue recording for our Blazing community to talk a little more specifically about how we're planning to implement our plan, what specifically we're thinking about. And it's really a segue to say, we really would invite you, if you're listening but haven't engaged with us, really would invite you to jump in and join us. It's really impossible once a week to sort of cover exactly all these different scenarios and plans and what you should do. And right now in the last week, we've been talking with our members about how to stake, like how to actually earn interest on that, how to get onto new platforms, even more specifically answering their questions and responding to sort of individual scenarios. And that's why we're here. We don't have all the answers, but we do have, a wealth of experience and skills. And frankly, our community does too. And we've been gaining from what other people have been doing. So again, that's blazingcrypto.io/join. You can join one time for 1 month at a time, $12.99 a month, cancel anytime. We really would love to have you join and be a part of what we're doing on Discord. So without further ado, hope everybody stays well. Keep a level head. Remember, commit to the principles and everything is going to be just okay and all right. So we'll see you next time. For Brandon and Justin, see you later. For more information, check out our website at blazingcrypto.io. Additionally, if you have friends that are new to crypto, share our trailhead videos from our website, which is a great way to get introduced to crypto.